Hey, good morning, everybody. A very warm welcome to the second webinar in the Brownfield development series, a combination between Mills and Reeve and RSK. Today, we're going to discuss the role of environmental insurance in brownfield development projects. Now, we've probably all been in the situation where a high-risk environmental report lands on your desk, or you have a request for a pretty wide or unreasonable environmental indemnity, and this threatens to cause a stalemate. Now, from my experience, a combination of environmental insurance and some tactics on the environmental law side always saves the day. So it's a very important topic. I'm delighted to be joined by Duncan Spencer at EDIA, who's an industry expert on this topic, and I've worked with on probably thousands of transactions over the last 20 years, so you're in very good hands. Some housekeeping. We want to make this as punchy and short as possible. I think there's a bit of webinar fatigue. So it's going to be 30 minutes. Duncan's going to present for just under 20 minutes. You will have the ability to put in questions. We'll pick some of them, and I'll ask questions at the end for the last 5 to 10 minutes. And then a recording will be sent to you afterwards so you can share it with colleagues. So sit back, relax, and let's hear Duncan tell us how environmental insurance can help in these projects.
Thank you very much, Keith. My name is Duncan Spencer. My business is EDIA Insurance, and we're a specialist insurance broker focusing entirely on environmental insurance. And in particular, we look at brownfield development sites. Presentation that we're going to run through today is give you a quick introduction to what is environmental insurance, when do we use it, how can we utilize it, and why buy it. We've got a series of case studies that we run through as well that hopefully gives you a better feel for the product and its application. So what is environmental insurance? It's an insurance policy that provides cover against legal liability arising from pollution or environmental damage. And it has two main concepts: whether that pollution is within the boundary of the property, but then also whether or not it's beyond the property boundary as well. The reason why we have these two areas is quite often you could be held liable for cleaning up your own site because the pollution is present, there's a tank leaking, but also it could be migrating beyond the boundary of the site, whether it affects a river or whether it affects neighbours. So it's very important that when we start considering risk, we consider both what's within the property, but also what we can no longer control, what's beyond the boundary of the property. Cover obviously includes cleanup, and within cleanup, we include restoration. So putting your site back to the way it was before the claim was received. But we also give cover against third-party bodily injury and property damage. And that would be health effects to people who live nearby, or property damage would be the damage to their property, but also their business interruption. We also have extensions for legal defense costs. So that would be the cost of defending against a claim from a third party. And then also your own business interruption. So if the property had to close for a period of time to allow remediation to happen, your loss of income, whether you're a property owner, so you have tenants, so that loss of rent, or whether it's your own business that's been impacted, can also be insured. This is a very quick overview of the types of insurance policy that we offer. There are three main insurance policies. The first one is referred to as site pollution liability, and so that gives cover against pollution associated with the property. It's the policy that can include cover for loss of rental income or your own business interruption. We offer a policy called contractors pollution liability, and that it gives cover against pollution introduced or made worse by development works. So we'll talk about this in the case studies, But imagine that you have a landfill site and you're going to pile some foundations. The existing pollution could be made worse by your development works. And that liability is covered by this policy CPL. And then we have a third type of policy that's less applicable to development sites, referred to as commercial environmental insurance policy. It gives cover primarily against liability when the regulator has got involved. So it's not really focused on a third party's actions, but it's focused entirely on the regulator. Benefit of this policy is actually we can offer much longer policy terms. Our site pollution liability is normally offered up to 10 years, maybe we can extend up to 15, whereas this policy can get us covered policies up to 25 years or periods of mortgage that might be lent on a property. Limits that we offer, typically we offer policy limits 3, 5 or 10 million pounds, but 30 million is readily available, probably only from one insurer. When we provide cover or policy limits of more than 30 million pounds, we start to involve 2 insurers. And so it gets more complicated, but it's certainly available. And then the last thing to point out, benefits of the policy. These policies can be transferred. So if you're a developer or whether you're an investment fund that's only looking to hold a site for a short period of time and due diligence has picked up this problem, buying an insurance policy gives you some additional benefit in that you can pass the policy on to the future owner or even lenders if you're trying to remortgage, for example. So the policy is designed to reflect your ownership period. And so it can be adjusted and can be amended as we go through your ownership. So through development and then tenanted, and then when you come to sell as well. Now, when we look at risk, and we're going to use this in the case studies that we'll run through, it's very important to just make sure we're talking about the same kind of concepts. And so I'm sure the RSK presentation is going to run through this. A normal model that we look at considers a source, pathway, and receptor. A source of contamination could be spills from a chemical. That's where the contamination is coming from. The pathway is the geology that allows that contamination to move, and it seeps through the geology, gets into our aquifer, and that can then migrate to our receptors, our rivers or our drinking water. And it's important to note that when we have a risk, we need to have this source pathway receptor present in all situations. This is a quick case study of a site in Cheshire that we looked at, and it's a good way of just seeing those issues from the top down. Oh, sorry, that was a bit too fast. The site itself is a former chemical works. It has some receptors. It has a river that runs down the Sutton boundary. It wants to keep moving on. We have neighbouring properties. We have our development site, and then we also have the other businesses that are next door to it. Within the site, we have a series of contamination sources from the manufacturing process, from tanks, or the water treatment plant that was right next to the river itself. And it uses the geology as a pathway to get towards these receptors. So it's this migration of contamination that's of the concern that we have. Now, the problem that you have when you carry out a site investigation is you're only ever getting a snapshot of the condition of the site. Maybe you'll monitor it for a period of time, but this migration is taking years to happen. It started years ago, and it'll continue happening after the investigation. So when you procure a site investigation, please remember it's just a snapshot of the case. Now, the issue that we get from that is who is responsible for the contamination? We have a development site where we've got pollution that we know is already on site. We've got pollution that has already migrated off site. It can't help but start to migrate through water and get off site. We also have the situation that pollution will migrate off site in the future. And what's causing this? Is it the fact that it was already migrating, or is it your development site? And so we have these graying boundaries of where the liability and where responsibility actually arises. And so the solution, going back to our product, is to consider both policies. We have our site pollution liability policy, looks after the historical pollution. We have our contractor's pollution liability, what's made worse by the works. And buying them in combination gives you the ability to ensure both what's already there and what's already migrating and what's going to migrate from the site. So when we offer our products, we offer them as a combination. Even though these are two separate policies, we offer them in combination. Let's look at a case study. Titanium oxide works that used a series of lagoons to dispose of its waste materials. It's now a retail park. Our client was purchasing the retail park and it had 2 tenants in place. And the tenant for this northern area was looking to develop the site and make that unit bigger. The issue with the site. Back in the 1930s, it was used as a series of lagoons for disposing of this titanium oxide. Through the process, the titanium oxide was very wet, and so it was stuck in lagoons to dry out. What you see on this plan is the problem with the site as well. There's a drinking water well that's to the south of the site, and from the drinking water well, there is an adit. So a horizontal drain that was used to take water from the site, from the Jork aquifer underneath the site. And obviously it's located straight beneath our lagoons. The site's used for titanium dioxide waste disposal. Through the 60s and the 80s, it was actually used to dispose of other waste. So it's a general landfill for a period of time before it was developed in the 1990s. When we look at our conceptual model, the source pathway receptor, we have our waste materials and we have our groundwater straight underneath it. This is the chalk aquifer that we're in. We have our drinking water well and our adit that's straight underneath the site, and it's collecting water to use in drinking water. It has 2 properties that are built on it, and one of these properties is going to be developed. And so our concern is the process of development actually causing this pollution to migrate and get into our drinking water well. When we talk about source pathway receptor, we have our source, this contamination, we have our receptor, and our pathway is really short. It's 20 meters. So it's very rare actually that we have this situation that we have such a receptor in close proximity. Now, when we were brought to be involved in this, we were asked to get involved because the purchaser was working on behalf of quite a risk-averse investment fund, and the purchase of the property had actually already gone through, and it had gone through because it was considered a low risk. Now, it's considered a low risk because although we have this really short pathway, it's been like that for 70 years. So surely it's not causing any more trouble, which is probably true, but it's still scary. And one of the biggest concerns is actually that development process. We also had some other issues that were coming up. So the local authority, through the planning application, recognizes this really close proximity and actually requires a monitoring network to be installed. So we have a local authority and environment agency who are looking to make sure we're not making things worse. And then when we actually understand that we might be receiving a claim at some point in the future, who's responsible? Is it the landowner? So the guy who owns the site, so has taken on responsibility for the historical contamination? Is it the tenant? Well, they want to develop it. Or is it the contractor? And so we have this difficult situation where all 3 people don't want the risk, but obviously the risk is going to sit there somewhere. And so is the risk insurable? Well, we sold an insurance policy for it, and the first policy we placed was the CPL policy. What happens if we make the situation worse? Now, what we did is we insured the landowner's liability. The contractor, they take on the risk themselves. They need to control the risk themselves. If this liability falls through into the landowner and therefore the property investment company, the CPL policy will step in and protect them. We've also got a policy, and that site pollution liability policy, that will come into force after the development works. The reason for that is that when we come to sell the site, so our client looks to sell the site, this policy can be transferred with the property as well. So this is a very difficult risk indeed. Very complicated messages being given by consultants. Well, this is low risk, but oh gosh, you're gonna develop it. You don't know what's going to happen. We have a conservative investment fund, and the insurance policies have been able to get both of those issues resolved, and the deal carries on, the development works happen, and we can now go on and sell the site with an increased investment, increased tenant rental income. Why buy environmental insurance? Well, one of the key reasons for buying environmental insurance is actually the ability to get support in the event of a loss. If you are a owner of a works, if pollution is discovered to have arisen from that works, how do you know how to deal with it? Well, one of the best things you could do is actually have an insurance policy. These insurance policies have a 24/7 hotline. You phone them up, they'll step in and give you the support that you need. These policies are bought when we have a transaction to facilitate. We're concerned about regulatory action. We have a general need for risk management. We want to improve risk management of our portfolio. These policies are very useful for demonstrating that we're managing that risk. We're concerned about legal costs associated with litigation. Even if it's a spurious claim, the policies will help you manage that risk. And then the last reason is often we have a client who's been burnt in the past, and so they've learned, actually, we don't want to keep this on our balance sheet. We'll use an insurance policy to manage it. Now, just quickly, we've got two case studies that are M&R projects. They're not really development sites, but because they're recent M&R policies, we decided to put them in. They give you an idea of the cost of the policies and the application for them. This first one is a industrial estate that's being acquired by a pension fund. The key issues with the estate, it already had an environmental insurance policy placed for the site, so for the previous owner. However, the policy had a series of exclusions in it that actually meant that the cover for third-party claims, so that is a claim from the tenant or from a neighbour, wouldn't be covered. So the risk there is making sure that when you do buy a policy, it's giving you the cover that you want. Pollution's already been identified in a brook to the east of the site, so we know there's a known issue, and we know that the pollution is present within the site. Historical maps have shown that the site itself was a landfill, and just next to it was a gasworks. So one of the concerns that we have is when the gasworks was closed, did it end up in our landfill? What we did is we placed a full site pollution liability policy, and it replaced that existing policy that was already in place, already there. The policy gave us 15 million limits for a period of 13 years. It was a 10-year policy and a 3-year extended reporting period. We got business interruption cover, we got crisis management cover, and the premium inclusive of tax was £160,000. Given the value of the property, that premium was insignificant. The timescale it took us to arrange that, it was about 5 days from inquiry to getting a quote in place, and then the policy was placed as the transaction went ahead. The second project, Project Lodge, slightly different. It was a portfolio of 12 properties that were all operated as pet cremation centres, varying past uses. This particular one was on a historical landfill site, and so there were some issues with wider waste management permits. We placed a policy. This was the CEIP policy. We provided £1 million limit per property, 15-year policy term, £70,000 premium. That policy was from inquiry to placement. That was a Friday to a Monday, so across a weekend. So again, dealing with a limited information request and accelerating to match the transaction. So I'll hand back over to Keith. That's my 20 minutes up. Thank you very much for listening.
Thank you, Duncan. Thanks for sticking to the time so well, and really liked your slides. You might have to help me with mine. Now, you know, I'm an environmental insurance convert, but there are still many non-believers out there. I want to present your products, or the insurance products, warts and all. So what is not covered by these policies?
Yeah, well, so of course, the insurance policy is subject to limitations. When we carry out our job, what we do is we make it very clear what isn't being covered. And so we package a report that's easy to interpret, easy to understand, and part of that is what we're not covering. On a development project, the key bit that is not insurable is the cost of development. So if you have a petrol station that you want to make into a residential housing, the cost of making that petrol station suitable for residential housing, removal of the underground storage tanks, etc., that's not insurable. That's referred to as a business risk. But it's important around the development, we also have, well, what happens if the contamination has already migrated beyond the site? What happens if you haven't remediated it all? What happens if you make it worse? Those aspects are insurable. They're the unknowns. The known bit, the remediation of the site to make it suitable, isn't insurable. Other key exclusions would be after the site has been developed, a site investigation, so a voluntary site investigation, you wanting to carry out a site investigation to see if contamination is still present, that's not insurable. The pollution that you find through that voluntary site investigation isn't insurable. Insurers do that because they want to protect themselves from a self-triggering, the moral hazard of having a policy and then thinking, well, you know, I can use this policy to clean it up now, and then I can make my houses on my petrol station. It's designed to insure you as the site sits. Now, that's normally acceptable because when you develop the site, you want to sit on it for a period of time and you want your tenants to operate there without incumbent. And so the policy is designed to match that. It doesn't cover the voluntary investigation. The last piece to be very concerned about are underground storage tanks. Environmental insurance policies have an exclusion for known underground storage tanks. If you know there is an underground storage tank that's still present, the policy is going to exclude it. You can remove that exclusion. It requires specific information, but it's very important to make sure that when you're dealing on a site with an underground storage tank, you declare that underground storage tank and you demonstrate that it's safe. Once you can demonstrate that it's safe through a pressure test or wet stop management, then the insurance policy will provide cover for that underground storage tank. So it's a management issue, but it also comes back to, remember, you need to know what the policy covers and what its limitations are to use it properly.
Okay, thank you. A very hot topic at the minute, certainly in the environmental lawyer world, is PFAS contamination. Now, Mills and Reeve dealt with the site recently where there was a fire training ground beside an airport, and it was basically we had to give an indemnity. One side had to give an indemnity with no time limit, and I think at the time that wasn't insurable. Now, my concern is the Environment Agency are investigating this at the minute, and they're saying it's not just fire training grounds, but it's, you know, maybe 20 other industries. So it's going to be a big public issue. How is the UK environmental insurance market reacting to this, because it's so important?
Yeah, it is. So just in case, well, first of all, if there's any chemists on the call, we apologise. I apologise for using the term PFAS. We refer to PFAS because it's a lot easier to pronounce than what it's actually called, and it involves a whole range of chemicals that are used in fire training, Teflon, Gore-Tex. The lining of the cups that you drink from Costa and Starbucks all has PFAS in it, and it's referred to as a forever chemical. It'll stay in the environment forever. It's a hot topic because there are some huge claims particularly in America at the moment, where they still have not come to a landing about how much PFAS is enough. So they're considering parts per trillion as still being a trigger for remediation of PFAS. The problem that you have with that, of course, is if you look hard enough for the stuff, you're going to find it. You know, if you look at polar bear blood samples from the Arctic, you'll find PFAS in their blood. So, so it is a hot topic. It's definitely worse than the new asbestos in the insurance industry, I would say. There is a wave heading towards us. Now, in the UK, we are still undecided about what is a problem and what isn't a problem with PFAS, and that's the issue. So as of today, we can still insure PFAS. But the problem is that when we know we have a PFAS problem, we can't then insure it. So we are insuring when we have unknown PFAS issues. We did do a development site recently where we had identified PFAS and we were able to insure it, but we only had one insurer that was willing to take that risk. Everyone else excluded PFAS. Now, what that does, what that brings into another concept is what we're seeing more and more are environmental consultants carrying out site investigations and screening for PFAS as a matter of course. And of course, they're finding it, but they're finding it when there was never a source of PFAS. There wasn't a fire there beforehand. And what that makes you think is, what are you going to do with those results? So there's two answers to your question. First of all, the insurance market currently is still insuring PFAS, but only when we can show that there isn't a problem. So it remains an unknown issue. Known PFAS issues are highly challenging. And the reason for that is this wave of claims that are going to be expected, that are coming from the US, that will be expected to land in Europe at some point in the future. The other side of the coin is, if you are a consultant looking for PFAS, just think about why you're looking for it. And if you're looking for it and you have no intention of doing anything with it, and there was never a source there in the first place, so you've got no reason to look for it, it's just screening, then why are you looking for it? So just think about why you analyze for it in the first place, and watch this space, I guess, is the best answer.
Yeah, thank you very much. And that actually comes back to, environmental insurance doesn't solve everything. And that's why it's the role of environmental insurance. You can then look at other things, indemnities, trenches, ongoing monitoring. Thank you for that. You mentioned about the indemnity policies. These are the regulator policies, the CEIPs. Now, they're obviously cheaper, they're longer, so that is attractive to many clients. However, the big thing is it doesn't cover civil claims. And normally we would get one of your super duper policies for the civil claim protection. If a client comes to an environmental lawyer, gets a liability analysis, and we say, actually, civil claim risk is pretty low. The main thing is actually Water Resources Act, Environment Agency, enforcement risk. In that situation, can you have an indemnity policy with a CPL for a development project? In theory, you can. There is nothing stopping you do that. Apply that approach. The way I would probably look at it was I'd apply the CPL during the development works, and then add the CIP, the statutory liability policy, after development work. So actually split them. The reason for that is, and the reason why we actually trying to sell both the SPL and the CPL policy together, is when the claim is received in 5 years' time, you've no way of telling whether or not it was the piling that caused it or whether or not it was there in the first place, because you've only just discovered the problem. And so we like to sell them from the same insurer so that we know that it's covered. I don't really care which policy is covering it, but it's covered. And so by splitting them, you have this gap. And as soon as you have a gap, you have an ability for an insurer unfairly say, no, it's not our policy, you need to talk to them. And so that delays the response time that we get on supporting. So in theory, it's possible. It creates more challenges. And so I would probably look at that situation and splitting them completely. So the CPL during development, and then we add the statutory liability policy post-development. Okay, thank you. That's good advice. So SPL is better. And finally, I think we've just got a minute, actually 30 seconds. Last kind of tip for everybody listening. if you're just trying out insurance for the first time, what's your tip to make it as smooth as possible?
Yeah, make sure the team is the correct team to be helping you. There are competitors to EDIA, so I'm not saying we're the only people, but make sure you're talking to someone who doesn't just say they're an expert. It's very easy to say you're an expert. Make sure you actually pick someone who's done this before frequently. Make sure that the legal team also is fully aware. So quite often we work with a legal team who haven't seen one of these policies before. It'll take them a week to review the policy. Well, we could have done on all sorts of additional work in that week. So making sure you have a lawyer that actually knows these policies as well. And then making sure the environmental consultant is also answering the correct questions to begin with. So my recommendation actually would be, from the get-go, if insurance is going to be considered, actually bring in the legal and the broker right at the beginning, work with the consultant, and then specify what works they're going to be carrying out and work through the whole project that way.
Perfect. Thank you so much, Duncan. Right, we're going to leave it there because we're just ran out of time. You see in this slide, there's a few more, the last two of the webinar series. The next one will be RSK, and then best to last, Mills and Reeve in September. No, actually, Duncan, yours was brilliant. So in summary, if you do have an environmental challenging site, get your environmental liability analysis, who's liable on-site, off-site, get your environmental insurance summary report. This is very useful for negotiations. And then with the correct team, we can plug any gaps. Now, thank you so much, everybody, for attending. Please fill in a feedback form if it pops up. And our BD team are going to send a recording to share afterwards. So all the very best and have a good day.